Hey everyone, I'm Ed here with Down to Trade. As always, joining me today is Varian Croft, the trading wizard. Varian, how you doing, buddy?
Doing awesome, man. Glad to be here. Looking forward to it. Today's focus, we are looking at the relative strength index, the RSI. It's not just an indicator, it's your radar for market momentum and potential reversals.
Right. Now, for those of you who don't know, Varian and I have been trading together for many years, and I'm sure he'd agree that RSI has been one of the strongest, if not the strongest tool in our arsenal for several years. In fact, during 2022 and 2023, when many of our traditional indicators, including market internals, when those stopped working as efficiently as they had in the past, RSI was one of the best tools that we relied on every day to give us those amazing returns. But it gave us the opportunity to really hyper focus on learning everything about RSI and becoming rather proficient in its use in our trading. In fact, I was actually able to use this knowledge to develop my own advanced RSI divergence techniques and methods that you really won't find anywhere else because, again, it took me a couple of years to develop them, but we're going to cover those later on. For now, remember, RSI is more than just numbers on a chart. It really is a momentum oscillator that measures the speed and the change of price movements encapsulated within a range of 0 to 100.
Yeah, absolutely. And traditionally, the RSI is calculated based on 14 periods, which that can be days, hours, or even minutes, just depending on the chart that you're utilizing. This setting is pivotal because it defines the sensitivity of the RSI to market movements. And we typically use this default setting at Down to Trade.
Right. So when talking about RSI, let's just quickly cover the formula. RSI is equal to this right here. That's really it. We don't really need to focus on RSI, but I do want to talk about real quick what relative strength is within this formula. And relative strength is the average gain of up periods during the specified time frame divided by the average loss of down periods. So now this calculation actually highlights the relative strength or weakness of a stock based on its closing prices over a specific period. Now, one important thing to note here is that, again, relative strength is based on the closing prices over the specific period. Now, closing being the key word here to remember, and you're going to see why later on. But what's truly fascinating is how RSI values are interpreted. Below 30 is typically considered to be oversold, suggesting that the stock might be undervalued and could rebound. Above 70, however, indicates an overbought condition, implying a stock might be overvalued and could correct downward soon.
Exactly right. When we talk about oversold and overbought, we're really discussing extremes in market sentiment. Here's a chart and shows RSI dropping below 30. It's a classic oversold signal, often followed by a price increase as buyers enter the market seeing value. Conversely, when RSI exceeds 70, it's a warning bell that the market might be too bullish and a downturn could be on the horizon. So you can see here, we see RSI peaking above 70, which was quickly followed by a price dip.
Exactly. Now let's talk about my favorite aspect of RSI. Personally, I love divergence. Now, divergence with RSI is where things get pretty intriguing. It's when the direction of RSI trends diverge from the price trend. Now, here's a chart that we created to showcase the different types of basic divergence. Now, these first three columns shows what we call regular divergence. So we have bullish divergence medium, and bullish weakness divergence. And then we have their bearish counterparts. Again, strong, medium, and weak. So these 6 boxes right here represent what we would call regular divergence. Now, these two over here on the right are what we would call hidden divergence. Okay, so regular divergence over here and hidden divergence right here. Now, the thing about regular divergence is it signals a possible reversal in the market. So in a downtrend, we look for perhaps this bullish divergence signal, which would signal a possible reversal, a bullish reversal, which is why we call it bullish divergence. And you'll see for each one of these boxes, the graph on the top shows what price is doing. And here we see a lower low in price. And down here is RSI. And here we would see a higher low in RSI. And so when we see this indication, we're looking for a possible bullish reversal in price. And same goes for bearish divergence down here. In bearish divergence, we're actually looking at the highs. And when we see a higher high in price, at the same time that we're seeing a lower high in RSI, that would signal to us a possible bearish reversal. So again, these 6 boxes are all about reversal signals. And these 2 boxes over here on the right are what's called hidden divergence. Now, hidden divergence signals a continuation pattern. So these are your reversal patterns. Hidden divergence is your continuation pattern. So for a continuation pattern, again, if you're looking for that bullish continuation pattern, you get the higher lows in price and the lower lows in RSI. And conversely, again, with bearish divergence continuation, we're looking for lower highs on price and higher highs on RSI. Now, I actually want to introduce you to what I call advanced divergence. Now, these are divergence signals that as I briefly discussed earlier, that I developed over a couple of years. Now, you'll notice that we're not looking at any highs or lows on either price or RSI for any of these signals. These signals actually, you're looking at the trends of price and the trend of RSI in order to determine what signal you're getting. So for instance, if we're looking, if we're seeing an upward trend on price and an upward trend on RSI, that would signal bullish strength. Conversely, if we're getting sideways trend on price with a downward trend on RSI, that would signal to me as well bearish weakness, which is bullish. That would be a bullish signal. So I'd be looking for a pop to the upside on this one. And anyways, I'm not going to go through each one of these individually. You can kind of just take a look at each one of these charts. Now, if you'd like a copy of these 2 charts, just email us at support@downtotrade.com, or you can get this and many of our other resources for free by signing up for our free Discord server. I'll leave a link in the description below, of course. But I encourage you to use these charts most people print them out and they actually tape them to their desk. Now, if you're new to divergence, I suggest you start by practicing with the basic divergence chart first. Specifically the regular divergence. Stick with the regular divergence for a little bit. And once you get that down, then you can move on to the hidden divergence. And then from there, over to the advanced divergence. But now you can practice your divergence skills doing it live, or you can actually back trade it on your charts. Now, I personally would highly suggest you get in the habit of back trading it. So yeah, grab this chart, print it out, tape it to your desk wherever you are, and practice looking, go back in time and practice looking for divergence. It typically takes only a couple weeks to learn these patterns, and then you'll never have to look at the charts ever again. But let's look at a chart real quick to see divergence in action. And so this is the daily chart, starting back in December of 2021. Now, for this video, I use a daily chart, but you can actually use divergence. You can actually read divergence on any time frame. But in the, like, for instance, in the day trade room, we use it on the 1-minute chart all the time, every day. So one quick thing to note here. Remember earlier when I said that relative strength is based on the closing prices over that specified period? Well, here's where that really matters. Now, I've seen traders try to draw RSI from using the wicks. The correct method is to draw them at the close of the candle. So either at the bottom of the red candle or at the top of the green candle. But do not pay attention to the wicks here, because the wicks don't matter when it comes to RSI. This isn't like drawing support and resistance lines when you actually do take into account the wicks, the upper and lower wicks. In RSI, only the close of the candle actually matters here. So be careful of that. But quickly going through this chart, we have right here, again, I'm just going to kind of go through these real quick, but if you take a look at our cheat sheet, you'll see exactly what I mean. But right here, we have a lower low on price and a higher low on RSI. giving us a bullish divergence signal right here. And obviously price shot up. Now down here, we have a lower high and a higher high. That would be a continuation or hidden bearish divergence. And we saw that here. We had a little bit of a bullish divergence signal here, again, with a lower low and a higher low here. So that would give us a nice little pop-up. What else did I see here? Here's another bullish, regular bullish divergence. Here's another, this is probably like a weak bearish divergence. Here's regular, oh no, I'm sorry, here's hidden bullish divergence right here. Here is a bearish divergence that popped up. And then we have another bullish divergence here and another one here. So the more you do it, what's kind of funny is you don't need to, your eyes just kind of see it. The first couple of weeks that you do it, unfortunately, you're going to have to really look for it, and it's going to take a lot of practice. But eventually, what kind of happens is your eyes just kind of see it. It's kind of like looking at the Matrix. You just see all the divergence across the screen without really having to look for it. So this is why we really, really encourage you to practice this, because there's no shortcut to learning it or to becoming proficient at it. You just kind of have to do it, which is why take some time to practice, and it'll take you a couple weeks and you'll be pretty proficient at it. So Varian, how else do we actually use RSI?
Yeah. So, I mean, while RSI is really powerful on its own, pairing it with other indicators like moving averages or MACD can clarify signals and also help reduce any false positives.
Yep.
So combining RSI's momentum insights with some type of trend following indicators, it creates a multifaceted view of the market, allowing for more nuances and confident trading decisions.
Exactly. Now remember, managing risk with RSI doesn't mean you just blindly follow the signals, but really you're incorporating them into a broader strategy that includes stop losses, position sizing, and a close eye on the overall market trend.
Yeah. And, like we always say, practice makes progress. Start back trading RSI, and you'll be amazed how quickly you can become proficient at it.
Mm-hmm.
And remember, grab our divergence cheat sheets. They're free on our Discord. See the invite link in the description below.
All right, awesome. Well, Varian, once again, I heard from the grapevine that you actually have another killer back test for us today. So can you share what you got?
Absolutely. All right. Yeah, man. So yeah, for the back test today, just keeping in theme of what we were talking about with RSI, I just threw into Options Omega a real simple setup, specifically based on RSI. So as we talked about today with RSI, one of the things that it helps signify is when a stock is overbought or oversold.
Right.
So I just did something real simple on here on the SPX. And what I did is any days that the RSI was below a 35. And as especially you and I know, trading the SPX as much as we do, on a daily chart, it being below 35 is a pretty rare incident.
Right.
It's not something that happens very often.
On the daily, yeah, no.
Yeah. So it can be a pretty good indicator that some type of turnaround is coming in the overall market. So simply all I did with this back test is on any day that RSI was below 35, we entered into a 50 delta 45-day to expiration call.
Wow. So
something as simple as that, using RSI as our only signal. And as you can see here, 65% win rate. The average per trade ended up being around 13,000. The average loser was around almost 6,000 here. But as you can see, on something as big as the SPX that really kind of signifies the direction and the trend of the market, it can be a good indicator as to when it is a good time to go long. And, as always, we're not telling people when to buy or sell. Definitely, just because RSI is below 35, don't be buying calls on it on the SPX. But this just gives you an idea of what is possible out there. And I mean, just to show you, we can look at the trade log on this. And this goes back, I did it over just the past year. And on August 17th of 2023 was the first signal that it got at 3:08 p.m. on that day, and it entered into the trade. And you can see it went to expiration and it lost. That was a $10,000 lose on it. And you can see there's a streak of them here. So this is the whole point behind, you don't just want to jump in based on this. You need to be paying attention to market trend. You need to be looking at other indicators like what we talked about, but using, while using RSI. But you can also see once there was clearly a trend change in the market, it started here.
Right. And this isn't even including any risk management whatsoever. This is just letting everything expire worthless, which, let's face it,
you don't
that's
do.
certainly not in our typical risk management strategies, right? No. I mean, it's this is the bare bones worst case scenario type of strategy, and it's still looking fantastic. Your average per trade winner is $13,500.
Yeah. Yeah. So insane. And again, this is just to show the basic effectiveness that RSI can have.
Right.
So by exactly like what you said, we incorporate some risk management in there along with some actual technical analysis on the charts to give us a better idea as to when we should be getting into any of these trades. We could be reducing the number of losers that occur there probably pretty decently.
Yeah, this is why we don't just, like we said earlier, or like you said earlier, we don't just blindly follow a strategy into the unknown. That's a horrible way to trade. You might as well just go to a casino, right?
Exactly.
We deploy several risk management tools in every strategy that we trade on a daily basis. So, but yeah, man, this is awesome. I actually really like this. Those results are fantastic. Again, I'm just looking at this like, I don't want people to get the wrong idea. There's no risk management on this whatsoever.
Yeah. Zero risk management.
That's never a good idea.
No, especially when you look at trading the SPX. I mean, look at your average premium size here.
Yeah.
So, I mean, each one of these contracts, you're talking right around $10,000. Some of them as little as $8,000 is what you're spending on one contract.
Yeah.
So that's
not have any risk management on that. Yeah.
Yeah.
Awesome, man. Well, once again, great job with the back test. We're always excited to see what you got for us and bringing up all of these cool strategies. So thank you, Varian. And as always, if you'd like to learn more, if you'd like to see how we use these strategies every day in our day and swing trade rooms, I really do invite you to try out our membership for free. Just go to downtotrade.com. Right now we have some great promotions running, so you don't want to miss out on those. Again, just go to downtotrade.com. Now, if you like this content, do us a big favor and subscribe to our channel. And don't forget to smash that like button. We'd love to hear your questions and thoughts. So take a second to quickly leave us a comment down below. And that's going to be it for me. Thanks for tuning in, everybody. Varian, do you have anything else?
Nope. Just looking forward to trade with everybody.
Sounds good. All right, everybody. Until next time, this is Amit and Varian reminding you all to learn it, trade it, and profit. Take care, everybody. Happy trading.